We're joined by Feroze Azeez, Joint CEO at Anand Rathi Wealth. Feroze, it's been a while. Good chatting with you, and many congratulations on the promotion as well, the elevation to Joint CEO. But today is going to be more about understanding what the thought process is with regard to what are you advising your clients. You know, you were one of the early ones to call out that small and mid caps were in a zone which you were not comfortable with. We've seen a bit of a correction thereafter. How do you view both the small mid cap as well as the large cap index given the global context?
Yes, Harsh, it's always an honor to have a conversation with you. Thanks for your wishes on the elevation. Then coming to markets, I think Indian markets, we believe, are a very investor-friendly market. They're investor-friendly market because there are several circulars and further strengthening of speculative activity being restricted. So that's why you see that market rebounds are far more prominent. Like last financial year, there were 2 days where it was the lowest, which was 21,885 on 4th of June. On both of those days, I went on media channels, and it was reasonably clear that we are almost bottomed out because we are a cash market driven capital market. Because there are limits on net shorts which a person can build. You cannot have more than 2,27,000 or 2,20,000 now of naked short positions in the derivative segment. You call sell, put buy, and future sell. These are three short positions. This cannot sum total to more than 2,20,000 Nifty, which is abysmally small number. That's why you see exaggerated days like the Trump's Black Monday was almost bought into. So coming back to your more important point, what are we telling our clients? We are telling our clients that anytime if you get the index at an 8-10% discount from the peak, because that's something which you can numerically measure. Are we at the trough? We will never know. But are we below the peak? We will always know. 26 September 2024, when Nifty was at 26,200 and odd, from there on, if I get a 22,000 level, if I compute the fall, it was 14%, 15%. So anybody who has large capital sitting outside, I would definitely tell him to buy at 22,000 because he's got a 14-15% correction, which is what is the peak to trough average for the last 24 years. So plug all the gaps of equity is what we've been telling through the full quarter. As you would see in our results also, we collected the maximum amount of money in the worst of the sentiment last year. During our results, we shared what is the net flow, or significantly more than the previous quarter as well. And coming to the mid cap, small cap, I think the equilibrium is just around the corner between all the three.
Right. Feroze, good afternoon. This is Hiral on this side. Good speaking to you after really long. You talk about, yes, the equilibrium is probably around the corner in terms of your mid caps and small caps. But what are valuations telling you? Because there is fear. And with the fear, if you have to look at what the investor is watching out for is, can I still have further room of valuations which could bottom? And then is when I will look at entering the markets. What would you have to say?
Firstly, when it comes to small cap, there are several small cap indices. BSE has its own small cap. There is a small cap 100 index. I think the first clarity which needs to be emerging, like you've on the screen, you see NSE small cap 250. This is the one which everyone should ideally track because SEBI says NSE small cap 250 is relevant to domestic mutual fund investors. So first confusion which I'm trying to remove from your viewers' mind is which small cap index to track, because this is where the 35 lakh crores industry of equity mutual funds is considered. This is considered as the tier 1 benchmark. So point 1. Point 2, since there are 250 stocks, painting them in one brush in any circumstance is going to be a very difficult task. Either overvaluation or undervaluation or normal valuation, because these 250 stocks belong to different industries and different pricing models is what I would apply to value a certain business, depending on the industry it comes from. Now, coming to the median valuation for all these 250, I think they've come into a very, very good zone because earnings have done its job. Of course, people have spoken, earnings have been not so good, but I personally think earnings have been good. And if you look at the numbers, you will be pleasantly surprised that we have already seen a 10 to 12% growth in earnings in the first 9 months of the NSE Small Cap 250. And the last quarter results, I think almost about 38 of these 250 companies have declared results. And the earnings again for these 38 companies, which is almost about 14 to 15% weightage, has already given you about 10 to 12% earnings growth. So earnings growth support and already a correction of a significant nature is telling me that now there is a lot to do bottom fishing. But there's one strategy which I've back tested for years, if not decades, which works. If you want me to articulate that, I can probably do it for your viewers.
Do that, Feroze.
Yes, great. So what you do is you do a test. See, bad times help you understand who's strong. So if you take the last 1 year, step one, take the last 1 year. Find out which were the worst 10 days in the last 1 year. Arrange them in the descending order, saying that yes, 10 दिनों में market 3% गिरी, 4% गिरी, 5% गिरी, या 2% गिरी. You now know which are the worst 10 days. That's step one. Step two, find out which of the NSE small cap 250 stocks were positive on these worst 10 days. Once you get the positive stocks of these, and then you see whether there are any common stocks figuring in these list of these 10 days. If let's assume there's a stock which is positive 6 out of these worst 10 days, what does this imply? It implies that whoever currently owns this stock is not a fluid owner. अगर वो ट्रम्प के गिरावट के दिन अगर ये स्टॉक नहीं बेच रही ओनरशिप, that means they are not looking at the market, they're looking at the business stability. So whenever the markets are uncertain, always buy businesses. When the markets are doing very well, buy the price. When you see stocks which are positive on a bad day, that's the evidence that the ownership of this stock is very solid ownership and it is not dependent on some market movement. And those are the stocks which will throw up the best bounce backs when the tide turns. So this you can backtest for the last 25 years. This is the best strategy during market uncertainties. Very bad strategy when the market is going helter-skelter and positive, but a very good strategy when there's a sideways or a riskier movement like aapne kaha, that there's fear. This is the best strategy I have been able to backtest over the last couple of decades.
I'm sure you've done this already quite a lot of times. In the current exercise that you would have done to get these names, what comes up to you?
I'm not qualified to.
No, I know. I'm not asking you to give. I'm not asking you to give a view in terms of your recommendations, but and this is something which is an exercise which will directly give you the data. So anything that you could tell us on that?
See, there are about 7 stocks which figured. Okay, and if anybody went through the same steps, he's going to get the same output, like you rightly said. Okay, but I don't know whether I'm compliant in mentioning those names. This is why I'm being cautious. Okay, but I got 7 names which had a common factor, which were there in all these worst days. Out of which there are 2 stocks which I saw which had 6,000 crore of free float. That means, देखिए क्या है कि when demand doesn't decide the price of a stock. This is one thing which I realized after a lot of statistical analysis. If there is so much demand on a certain stock, but if the supply is not stopping, the stock will never discover its value. Like you see some stocks in the banking sector operating at 9 PE. There's enough demand for them, but there's so much more supply also coming in. So let me not dodge your question. I've dodged your question anyway successfully. All I'm saying is there are about 7 stocks which are common. Largely, there are some stocks from the financial services industry which appear.
Very, very interesting. Feroze, I wonder how allocation to commodities should be placed at this point. Gold has beaten the index over a longer period of time now, given the recent rally. How do you view commodities and how should you play it?
Harsh, in my opinion, of course, I would not be love to say this, but gold is not able to compete with equity. See, what happens is if you buy gold, it's not about the price. You will find five years of no movement in gold. Right? As an ornament, it's great. As a bar, it is great. If I put 30% of my portfolio in gold and don't see movement, you see 2018 to 2022, something thereabouts. You will see at least bouts of 5 years. In the last 35 years, you will find 4 years pockets where gold gave zero return. Right? That doesn't happen with Nifty. But still, gold has a big place for Indian investor. I'm not, but competing with equity will require some more degrees of no sideways movement. Gold gives sideways movements and it goes unnoticed because people don't notice its price. Nobody looks at your channel to look at gold sticker price. But Nifty ticker price is clicking on the right hand bottom corner every second, but not gold. So point I'm trying to make is gold is a very relevant asset class in India because people have to start to learn to replace debt. People are spoiling their futures, their inflation-proof need, just putting money in debt left, right, center, and supporting the government in their fiscal deficits, supporting banks for the net interest margin. But they're not supporting themselves by, so a good replacement to debt is gold. Half of your debt money should be in gold. And you will be able to get double-digit return even at these prices for the next 5 years. Because the price of 1 lakh or 95, 97,000 has not come on the back of rupee depreciation. This time it is because dollar gold has gone through the roof.
Right. So
And
Feroze, we're running out of time, but 3 top sectors that you would place your bets on right now.
I would place my best or bet on Nifty banks, Bank Nifty. I would definitely put IT, and I would also look at auto, and I would be very bearish on FMCG.
That's an interesting one. You know, I would love to talk to you with regards to your views on IT, but we will definitely touch base once again next week, probably to understand why are you bullish in terms of IT when the world is negative overall. But thank you so much for joining us on the show and sharing the views. So that's an interesting one.